Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're watching Your Stocks. I'm Cera Abdi, and with me is my colleague Mangalam Malu. Hi, Mangalam. Good afternoon, and it's a rainy afternoon. And it's not just the rains outside, but guess what? It's raining bulls.
It's raining bulls. I remember, just 2 days ago, it was the World Environment Day, and you said there should be some green on the screen. Since then, there has been a fair amount of green on the screen, but I'm actually more interested in the samosas that there are outside because I really feel hungry. I saw you eating a samosa, actually.
Mangalam, is there an Indian who can resist a samosa? And, something that we'd kill for is to find a fat-free samosa or a fat-free chola bhatura. But till then, well, guess what?
Have your fat and eat it too. Tell you what, the happiness that a samosa gives burns more calories than the calories
and it's
that the
first
samosa
rain.
gives.
It's the first big rain, right? You have to celebrate that.
Absolutely.
What's
so
better than a samosa?
What's better than a samosa for the rains? All right. So we will talk about samosas in a bit. First up, all the top stories that we're tracking at this point in time. The market powers on, cheering, the policy's neutral tone, and RBI's confidence on growth. Market breadth firmly in favor of advancing stocks.
Mid and small caps extend yesterday's rally. Both indices gain over 250 points.
10-year bond yields hit 7.96, a near 2.5-year high. Experts say 8% could be on the horizon. NBFC stocks quiet.
3 crore shares or 6% equity of Future Retail changes hands at 560 rupees a share this morning. Speaking to CNBC TV 18, Kishore Bayani confirms that the company will receive 575 crores via the clawback clause.
Mumbaikars must be ready to spend the weekend indoors as the Weather Bureau has issued an extremely heavy rainfall alert and warns that the heavy showers are likely to continue till Monday.
And guess what you do when you're indoors? More samosas.
More samosas, okay.
All right, well, the monsoon has certainly hit Mumbai. The entire country is expected to be covered by the 10th of June. So here's an on-ground report that's coming in from Vinaya Deshpande of CNN News 18.
We are at Chhatrapati Shivaji Maharaj Terminus right now, and as you can see, this is the traffic situation here at present. The traffic condition seems to be quite normal for a working day as of now, but several reports of waterlogging and traffic jam have been reported from across the city, especially places like Hindumata, Varli have particularly reported traffic jams. We have to understand that these are the pre-monsoon showers. For the next 6 days, Maharashtra is expected to witness heavy rainfall. IMD has predicted that over the weekend, Mumbai particularly, North Konkan is likely to have heavy to very heavy rainfall. Mumbaikars have been advised to stay indoors, but with the kind of traffic condition and waterlogging conditions seen in the city right now, even before the monsoons arrive, it is a question if the situation will be normal during heavy to very heavy rainfall over the weekend in the city.
All right, so that was our colleague in Chhatrapati Shivaji Terminus, but the rain seemed to have subsided for a bit. But then again, like the markets as well as Mumbai rains, both of them unpredictable. We'll keep an eye out on that. But before that, we will get all our experts to answer all your queries. We have with us Vijay Chopra and Rajat Bose joining us to answer all your stock queries. Good afternoon, and thanks a lot for joining us, gentlemen. Let's take it first to the query. We have SS Nandi calling us from Kolkata with a query. Has investments in Sintex Industries, 1,000 shares at 82 rupees. Mr. Nandi, go ahead.
Sir, good afternoon.
Good afternoon.
I'm holding SPTL, 1,000 shares of anti-rate of 82.15.
Just a second. SPTL is Sintex Plastics, right?
Sintex Plastic.
All right. So I think we should fix that. It's Sintex Plastics.
I can hold indefinite time.
All right. You can hold it for indefinite time. 82 rupees. Sintex Plastics is what he's holding, not Sintex Industries. So, Rajat, what's your view on Sintex Plastics? He can hold it indefinitely, but what are the charts saying? What is a good time to hold it till, or is this a good time to hold it?
See, this stock is in a downtrend since listing, and the downtrend continues. Barring a sporadic rally, it's a very small period rally in the month of December. After that, it has started moving down again, and this downswing continues. So my suggestion is to actually seek an exit. enter into this stock if Mr. Nandi has special information about this stock going forward for the long term. He said indefinite time period. So I assume that he is planning to hold it for the long term. Even in that case, I would suggest save your capital, re-enter at lower levels, and only when it moves above 60, there will be some sign that it is actually turning around, not before that.
All right, so sell on Sintex Plastics for now, enter when there are lower levels. Up next, we have Rakesh Narula, who's on the line with us from New Delhi. He has a query on Cera Sanitary Ware. Mr. Narula, go ahead, sir.
Yeah, I am holding 10 shares of Cera Sanitary Ware bought at 2065.
Okay, so you're making
So
some money.
what are the future prospects for long term?
Are you a long-term? Okay, so you said long-term. Vijay, let me come to you on this. Cera Sanitary Ware, not done a lot this year, not done a lot in the last 1 year, but for a long-term investor who's making a bit of money, is there a good level to exit, or is there perhaps reason to stay on?
Well, there is a definite reason to stay on. These are classical, consumption stories, and I have talked the same about Somani Ceramics and companies like Cera. So we have seen an overall slowdown in the housing sector, and due to that, we have seen some kind of a decline. But again, these are market cycles, and these companies will definitely recoup back very strongly. So I would say no need to panic. He's a long-term investor anyway. And I think that, if he holds on with maybe in a year and a half perspective, and if the markets seemingly do not show any kind of surprises, I'm sure that the stock has the potential of going up to 32, 3300. So definitely hold on to the stock. Do not panic. It's a good consumption story, strong company. I do not see any major challenges in the balance sheet as well. So definitely stick to the stock.
All right, stick to this stock, Cera Sanitary, and this sector itself has a few tailwinds going forward given the e-way bill. Let's move on to the next one. We have AP Saxena writing to us from Mumbai, holds 4,000 shares of Rana Sugars at 14 rupees for the last 2 years. Long-term investor wants to know whether to hold or sell. Rana Sugars now at 4 rupees. He's been holding it since it was 14 rupees. Rajat, what would you advise to an investor who's lost 10 rupees of the 14 rupees that he invested? And the sugar stocks, they've been on a downtrend for a while now.
Yeah, even the talk of the package
Right.
from the central government actually hasn't helped much. My suggestion would be this, that first the technical picture, which I study on the charts, that there are some signs of partial recovery, because on the normalized oscillators like RSI or for that matter CCI, they are showing signs of positive divergence that indicates that there could be some bit of a recovery. So on the one hand, he can actually expect that recovery and stay on. On the other hand, I would say that it could just be a blip and it can still move further down. If things were to turn bad, then it can hit 2.40, which is about 40% shaved off from the current levels. So if I were in his shoes, I would have saved the last 4 rupees. Even that matters.
That's true, actually. Just the other day, Rajat, you were speaking and you said that what do you do with a stock that has lost 90%, what it could lose 90% more? Vijay, your quick take?
Well, hello.
Go ahead.
Hello.
Vijay,
Yeah.
we can hear you. Go ahead.
So I think that, if we are talking about, Rana Sugars, I guess, I don't think that he should be in the stock. If he wants to be in the sugar space, which is anyway, very much news related, I think that, we should switch to even, either Mawana, or look for some other stock in some other sector. Because, what we find is that sugar primarily is very much news driven, and I won't recommend, a company like Rana Sugars, which has debt on the books, which has so many issues. And as rightly said by Rajat also, he has already lost a lot of money. So saving these last 4 rupees is also very important. So I would recommend get out of the stock, save whatever you can, and wait for a market correction, and then you can enter into a quality stock.
All right, so both our experts concur on that. There's some news flow coming through at the bottom of your screen that Max regarding this big M&A deal actually, and this is something we've been tracking now at CNBC TV 18 very, very closely. The deal in the insurance space, the IDBI Federal Life stake sale, and Yash has been tracking this closely. Yash, what's the latest that you've picked up?
Well, Sumera, just in the morning, we had reported that one of the two potential buyers, that is Aditya Birla Sun Life, had put certain conditions when it comes to the bancassurance tie-up which IDBI Bank and Federal Bank will provide post the transaction. Of course, IDBI Bank and Federal Bank had sought a premium to accept these conditions put forth by Aditya Birla Sun Life Insurance. Now, the latest that we're picking up is that Max has also really moved in terms of, safeguarding its interest when it comes to this particular transaction. It has shot off a letter to the IDBI Federal management saying that the crucial terms and conditions which they had expressed before signing and submitting the binding bid have not been met by the IDBI Federal Life management, and these crucial the points which that mention essentially range. The first one is common between Aditya Birla Sun Life and Max, and that is the exclusivity of the bancassurance tie-up which IDBI Bank and Federal Bank will provide. Also post any sort of privatization or merger of IDBI Bank if it happens. The second thing is an indemnification in case IDBI Bank and Federal Bank do not really keep up to the promise of giving this exclusive bancassurance tie-up. The third one is again common between what Aditya Birla and Max Life are putting, and that is the productivity guarantee. Remember, the premium which the two banks are seeking are, Aditya Birla had said that you guarantee us a particular business and then we'll pay you this premium, and exactly what Max is also saying. They're saying that the productivity is the key when it comes to this bancassurance tie-up, and the premium will depend on that productivity. Second thing is auto renewal of this bancassurance tie-up. Remember, the first phase of the bancassurance tie-up is going to be 5 years, but if the productivity from both ends, which is Max as well as IDBI and Federal Banks, are kept to the expectation, then there will be an auto renewal for another 5 years when it comes to this bancassurance tie-up. Yes, so the both potential buyers who are present in this particular deal are safeguarding their interest when it comes to the buyout plan of IDBI Federal Life Insurance.
All right, Yash, thanks a lot for that. Both of them safeguarding their interests. As of now, the shareholders are rejoicing that 3 and 4% gains coming in on both IDBI Bank as well as Federal. We'll keep an eye out on individual stocks, but let's take a short break. Come back, we focus on stock queries as well as the market as a whole. Well, triple century for the mid-cap index at the high point of the day, 18,750 thereabouts is where the index is at. The advanced decline at 5:1. We're talking about rains in Mumbai. A lot of rain-related stocks. Rather, we try to relate them to rains. Before rains, you try and get your cars checked. So Castrol is at the high point of the day. In Mumbai rains, a lot of people fall sick as well. So let's pull up a couple of pharma stocks. Granules, that one has clocked in gains of about 7%, surging as we speak. That one's at the high point of the day. Granules India. And Sumera, you and I were talking about samosas and all the other fried things that people eat during the rains, but for other parts of India where there are no rains and there are those fried things, along with those fried things, people perhaps have a lot of alcohol as well. Maybe that's why United Breweries, that one's moving higher. So United Breweries is at the high point of the day. So we'll keep an eye out on that, but let's get to answering our viewers' queries. Mr. Mohammad Arshad writes to us from Allahabad, wants to invest 60,000 rupees in IDFC Bank for the long term, wants to know what is the right time to enter the market. Vijay, IDFC Bank, Capital First, we have these deal merger acquisition talks keep going on. Yesterday, the RBI has given a go ahead as well. No objections on this merger. Do you think 60,000 rupees he wants to deploy in IDFC Bank right now is a good time, or probably wait for merger and the synergy benefits to come by?
Well, definitely, these synergies will come and would be visible in the balance sheets over a period of time. It doesn't happen, mergers at times take a year or so even. So I would say that wait for a correction, and if somebody wants to buy IDFC Bank with a longer term perspective, I think that, there's no harm at these valuations, because valuations are quite convincing. And with the merger of Capital First, there are visible synergies which are going to be derived. There's a lot of retail portfolio which will be added to IDFC Bank. So I would suggest that if at all you get the stock around say maybe 38, 39, which it has touched in the past as well. So that would be a good time to get into the stock for a longer term perspective. And I don't think that there is much damage to happen. The risk reward is favorable, and with a longer term perspective, I don't think there's a problem at all.
All right, up next we have Bhushan Bibhuti, who's on the line with us from New Delhi. Hi Bhushan, how can we help you?
to all. I am holding a few hundred shares of Greaves Cotton at
Okay.
around 120 or 125. I want to add more. Fundamentally strong, but with a 1 year perspective, what will be your recommendation? Besides that, if you are having time, you can give me suggestion on granules also. I am holding at 120. It's suffering a lot. And so these are two of my holdings.
All right, Rajat, let me come to you on this. Greaves Cotton, the first, and granules, if you could also advise him on.
I would say Greaves Cotton, he should continue to hold on, because Greaves Cotton is in the process of forming a bottom. That bottom could be anywhere between, say, 115 and 120. And a recovery may take a long time, but not much downside from here. And regarding granules, I would suggest selling on rallies. I'm not very comfortable with that stock. So Greaves Cotton is okay, but not so much in granules.
All right, so that's the word coming in on Greaves Cotton as well as granules. But we have with us Mr. Ranaljeet Singh, the founder and chairman of Max Group, joining us on the phone line. This is in following to the story that my colleague Yash just broke. He's joining us along with Lata as well. Thanks a lot, Mr. Singh, for joining in. First up, the story that our colleague has broken is that you've written to IDBI Federal Life, want to buy the company, and the critical part of your terms are not being accepted by IDBI as well as Federal. Can you comment on that, sir?
Yeah, thank you. Yes, I'm not sure whether we've written to IDBI Federal or JP Morgan, but this is correct. That the background is we had made a very aggressive bid for IDBI Federal, and discussions so far suggest that the prerequisites we had asked for, such as performance guarantees, clawbacks, etc., are unlikely to be given by IDBI Federal. Hence, we believe that the risk-reward equation is not in Max Life's favor or in the favor of Max Financial Services shareholders. So we have therefore decided to continue to focus, build, and invest in our two most powerful bancassurance partnerships, Axis Bank and Yes Bank. Okay. And the beauty is that the business has hit unprecedented levels of achievement from its inception. So this year we are tracking, have already achieved 20% growth in embedded value, 20% return on embedded value, 20% growth in new business margins. We are now hitting at 25 levels. Oh. So basically the boards of both companies took a view that why rock the boat and disturb a winning streak considering all the risks that come with a merger and integration. So we are staying on course with Axis and Yes Bank for our banker relationships. That's the brief background.
Mr. Singh, thanks for taking our call. But basically you're saying that you have given up on this deal. Is that the way we have to understand it?
Well, that's a good way of asking the question. I think let's put it this way, that we made an aggressive bid. And some prerequisites in that of those bids were that there would be some assured levels of performance. There would be a clawback in case those performance levels were not achieved over 10 years. And so far, the dialogue, negotiation, discussion shows an indication that IDBI Federal will not be in a position to accede to those preconditions, which were a part of conditions precedent or to our bid. And if that is the case, yes, we will. So I can't say we have given up because we have written to them and we have not heard back from them as yet.
Yeah.
But if they were to come back and say, okay, no, we have not given up. But if we're able to, if we see the way the discussion is going and they don't accede to those requests, then in that case we would have given up or we will give up.
All right.
Yes.
So I'm given to understand it's a 48-hour deadline and that expires tomorrow?
Lata, some of these things are technical. I know it's around end of day tomorrow. I'm not sure if it's 48 hours or 42 or 56 hours, but it's at the end of day of business tomorrow.
Okay. No, Dr. Singh, I can understand that your discomfort, is your discomfort arising only from the fact that there is a possibility of change of control at IDBI Bank and you want to make sure that even if it were merged into any other entity, your exclusivity with IDBI should continue. Is that your main worry?
That is one of three reasons. That's the one big reason. The second is, even if IDBI Federal stays within its current ownership construct, and they are not able to achieve the sales volumes that are guaranteed, that we expect guaranteed. And number three, the decks are now clear regarding Axis and Yes Bank, particularly Axis. So we believe that since we have such a strong level of integration and working with Axis, why even distract ourselves from just continuing to build on success with Axis and Yes Bank? So therefore, we feel in absence of those assurances, it's not worth it.
Fair enough. So my colleague Yash is also with me.
Mr. Singh, thank you so much for joining us on such a short notice. My first question to you, of course, going back in time, when the binding bids were placed, these conditions which are arising now, weren't they clear at that time? Why was there no communication before actually placing the bids and, coming out so strongly for IDBI Federal Life?
No. These are conditions that were sought in the bid, as a part of the bid. The process of negotiation and so on and so forth is not complete. But as I said in the beginning, we are given to understand from the negotiations that have taken place so far that those requests or those conditions will not be acceded to. And in sort of anticipation or in reaction or in response to that being the case, we are saying thank you, but no thank you.
Okay. So, if you put on a neutral hat and, some other entity were making this bid and competing with AV Birla, who we understand is the other contender, don't you think both the bids become equally difficult if IDBI indeed were to see a change of control?
Well, I don't know the relative strength of the other bidders, and whether they have a platform as strong as Axis or Yes Bank and so on and so forth. So the relative value to somebody else may be different than the relative value to us. So for us, we have a platform which is a high-performing platform with Axis and Yes. So we have to compare our scenario relative to what we have. Somebody may not have what we have, and they may find that the risk is worth taking, whereas we as representatives of our shareholders of Max Financial Services and Max Life feel we are on a stronger wicket where we are.
All right. Dr. Singh, I wanted to know what is your own vision of your insurance venture? You had wanted to once ally with HDFC Life, and at that time you were even willing to move away as a promoter. And then now you are all in and willing to put in more money to expand your business. What is your next step if this doesn't materialize?
Well, I love the way you ask your questions. I have to say that I am just amazed at how successful Max Life is. I just told you about our 20-20-20, 25-25-25 performance.
Yes.
Given this track record and performance of the company, actually, to be very honest and put it very in simple terms, I almost feel like it would be stupid to want not to bet and work and build on Max Life. So I think the answer, honestly, is there's, to some extent, a change of thinking that, no, this business is fantastic, and it is for us, it is destined for us, and we must keep it and grow it. That
is indeed the sense I got from the evolution of events, that, insurance in India is taking off so much that should we understand you want to now follow this as one of your very key ventures, and you won't look to sell out, rather you will look to expand?
Oh, I don't think it's one of. I think it is the.
Okay.
So for us, it's the jewel in our crown, and as I said, look at how crowded the sector is.
Absolutely.
Look at how complex the markets are, and we continue year on year to outperform our own performance in the previous year. So, and with, as I say, our only infirmity is that we are not a bank. Okay. But with this strong integration we have with Axis and Yes, that has that surrogate has worked so beautifully for us, and our agreements are firm with them. So we feel we must go for it. There's no logical reason for us to not continue to grow and stand by the business.
Sir, you've spoken about the bancassurance channels and how strong Axis and Yes both have been for the company in terms of distribution. The partnership with Axis particularly ends in 2021, if I'm not wrong, sir. If IDBI Federal were to happen, this merger, then you would have had another strong partner in place of Axis for another 5 years or 10 years. But now, if this deal does not really go through, then in absence of Axis, what do you do? Are there any plans? Are you in talks with
No. The current agreement has a validity to 21, like it did before, and it was extended by 6 years. It is not to say that the validity of the agreement cannot be extended for another 10 years. Please realize that the fee-based income that Axis Bank gets from Max Life is a very substantial part of its business as well.
Okay.
So there's a high level of interdependency on each other, and we are integrated to the core. It's not as if like there are a bunch of people just selling life insurance in branches. We are very well integrated from training to IT to people and so on and so forth. So it's a de facto, without there being stakes held by either side, is de facto like a joint venture.
Okay.
So in every company, there have to be agreements which have a periodicity. It doesn't mean that those agreements don't get extended. And IDBI Federal, while, as I said, we made a very aggressive bid and so on and so forth. You know, it would have taken us, 5 years, 6 years to integrate. It's not a ready-made distribution platform. If it was, then why would they be wanting to merge the company or sell the company?
Absolutely. Dr. Singh, while I understand that deals have to have periodicity, our doubt emerges from the fact that Axis also is going to see a change of management. It may be only at the CEO level, but still there is a change of management. So you feel reasonably sure that in 2021 this gets renewed?
As I said, my understanding, and I hope I'm not incorrectly informed, that the fee-based income Axis enjoys is a double-digit number, clocking towards 20. So any new CEO, any new leadership that comes in will be cognizant of that. Why would somebody want to give up a winning streak? I don't understand.
Okay.
And managements come and go. That's okay.
Yeah.
But performance is performance.
Okay. Yeah. What's your plan B, sir? I mean, now I guess it will be plan C. If this doesn't go and you have given them, I guess, 24 hours more, some end of day tomorrow, if nothing comes from the IDBI Federal management or from JP Morgan, are you looking for other partnerships? Is there anything that we should hear from you soon?
No, as of now, we are not. Okay. We are focused with Axis and Yes. And actually, if you look at the top X number of the top 5 or top 10 banks, either those banks have their own life insurance business or don't have the footprint. So I don't think there's a suitor out there. So in any case, we are not looking at it. No, we are focused on what we have and will build with them. Yeah.
All right. Dr. Singh, it's a pleasure speaking with you, sir. Thank you very much for joining us at such short notice. Okay, that's Dr. Singh. It does look like the merger will be, the bid will be off, because he said in no uncertain terms that if their terms are not met, they are not going to continue or have aspirations for the IDBI Federal, bid. Bank assurance bid.
All right, Yash, Lata, thanks very much for that. And Lata, you have a good holiday. We'll wrap up on mid-cap radar. I was on your stocks, sorry. Do stay tuned. Closing bell is up next.